In this video, I'm going to show you exactly how I invest and went from 0 to 2,000 in this year alone, and how I'm actually a super lazy investor, but somehow I've managed to beat most portfolio managers. Let's go. What's going on, people? It's your boy Kalichi back with another video. If this is your first time around these parts, hit that subscribe button. If you enjoy anything that we talk about in this video, hit that like button. Turn that thing blue. But anyway, in this video, I'm just gonna be going over my entire Robinhood portfolio and how I was able to invest from 0 to $2,000, literally investing $50 every 2 weeks. At the beginning of this pandemic, and really at the beginning of this year, even before the pandemic, I started taking investing a little bit more seriously. I started saying, you know what, I wanna learn how to invest my money. I wanna learn how to do this by myself, because previously I had a financial advisor and I was just like, you know what, they can handle everything. But then I started learning more and I was like, hold up a second, fees, and more fees. And I was like, you know what, I'm gonna handle this myself. So I started learning how to invest in a few things. I mean, I have my Roth IRA, which is not what y'all are gonna see, but I also have a different investment portfolio with Robinhood, which is what we're gonna go over. And speaking of which, let's get into it. This entire Robinhood portfolio was one that I actually started back in 2018, but then I stopped investing for a while. And then, or not really I stopped investing, I just didn't know what I was doing when I first started investing. When I first started investing, the only company that I had was Microsoft, which I always say Microsoft is the biggest, best mistake that I had of all time. Literally, I was listening to a video about Microsoft and they were talking about how Microsoft has changed the way that they do things. And so I was like, you know what? I want to get investing again, so I'm going to invest in Microsoft. It was between Microsoft and Apple at that point in time. And even as a staunch Apple hater, I still understood that Apple had a really good business model. And so, I mean, most likely the phone or the laptop that you're using to watch this, you're watching on an Apple device, whether it's a MacBook or an iPhone, whichever way. So because of that, I was like, do I want to invest in Microsoft or Apple? And I invested in Microsoft, and that has panned out very well for me. I mean, if I invested in Apple, I would have done a lot better. But regardless, I decided to pick Microsoft because I saw the way the business was changing. Not that I knew anything about investing then. At that point, it was like, whatever price point it was at, that's what I was gonna buy it at. And so that's what I do with Microsoft. And I'll say this, it's the biggest, best mistake that I've ever made because I've had a 98% return. I bought this at $110 and I've made over $109 off of this investment. Now, you could have said, hey, if you invested way more money, you will have way more money now. That is true. However, like I said, I didn't know what I was doing. All I thought about investing was like, you just buy one time and you've bought the investment that you need to invest. And so that was my first investment ever. But one of the things about this portfolio that is interesting is this portfolio is mainly ETFs. This is the reason why I have mainly ETFs in my Robinhood portfolio is because Robinhood is way too gamified and makes it way too easy to buy and sell stuff and makes it way too celebratory whenever you buy or sell stuff. And I didn't want any of that. So the easiest way for me to get out of that mindset was to buy ETFs. But even more so, I wanted to see if I did single stocks versus ETF, which will actually do better in the long run. And so in this portfolio, we'll go over my single stock portfolio another day. It's my M1 Finance portfolio. It's single stocks. That has its own stories with it, and we'll compare that another day and just compare that to how the market does. But the interesting thing about this portfolio is if we go and we look at year to date, I'm up about 26%. 26%. Again, this is maybe a small portfolio to most people. Some people have 100,000 portfolios, $1 million portfolios. I don't care. For me, I am way more impressed that I was able to consistently invest money. Of my own money, I have about $1,600 put into the market, about $1,600. And then over gains and everything, unrealized gains, I have $400 of that, which is pretty cool. But if I compare this to my mom's is way better. She has like a 40% return when we did her portfolio, but regardless, it doesn't matter. This is something that's very important for you to keep in mind. It doesn't matter what other people's returns are. What's more important is what your returns look like and how you invested. So the interesting thing about this whole portfolio is if we look at each and every single one of these things that I have bought into, it's literally, I got lucky. I'm gonna be honest with y'all because most of my investments were made when the market tanked. And so it makes my numbers look a whole lot better than it actually is. The biggest item or the biggest stock or the biggest ticker that I have in my portfolio is SCHD, Charles Schwab US Dividend Equity ETF. This is a dividend ETF, and this was, I put about $746 into it, and I've gotten back $149. My average cost of it was $53, which it was a whole lot lower, but of course I've been buying as the market goes up, because with ETFs, it's the laziest form of investing. Just select one ETF, which is another mistake that we'll talk about in a second, and just keep putting money into it. Just keep putting money into it, dollar cost averaging your way into it. Like I said, every 2 weeks, $50 goes into this account. And if we go back into this, I've just literally been putting money into it. But like I said, I made a mistake when I first started this account. I literally was investing in everything and anything. I mean, I had Disney at one point. For all those who followed the channel all the way back in like March, I remember when I made a video called I'm selling out of Disney, and you can check that video out up here. And I literally just went through why I was selling out of Disney in that video. But either way, I had Disney, I had Square, I had PayPal, I had a bunch of random stocks that I was just investing into. And then I started learning more, which is very important for you to keep learning as you're going through this journey. I started learning more to understand exactly how to invest, and having 10,000 different ETFs is a waste of your time. Pick one that you really like and then just keep putting money into it. If you notice on here, I have the SCHD ETF. I also have this DGRO ETF, which is a dividend growth ETF. I like it, but at the same time, it's kind of like a waste of space because I have that SCHD ETF. And then also I have this SPLG, which is just an ETF that tracks the S&P 500. Again, probably should not have been putting that much money into this and should have just been focused on SCHD. Like the $200 that I put into this, into DGRO, SPLG, and VSUX, all of that should be going into SCHD. So regardless, even despite all of that, it's actually turned out pretty well for the most part. And again, I'll say I got lucky. With Microsoft, I got extremely lucky at the fact that I just kind of was like, oh, I use this product, I really like the way that the company is going, and I bought into it. Ally is another one that I got extremely lucky on. I bought when the market was at its bottom. I mean, my average cost is $16 a share, and now it's $33. In other words, it's doubled in price since then. Again, I got lucky. I didn't know anything about understanding businesses. I didn't know anything about understanding fundamentals. All I knew was I use Ally a lot. I like their product, so I think they're gonna be good. So therefore, I'm gonna invest in them. And plus, they don't have that much debt on their hands. So I don't know anything about the banking sector. I don't know how all they make their money. I know they give out loans. I know that they have tentacles in all different areas. But regardless of all of that, I'm still investing in them. So that's what happened. I got lucky. My cost was $88, and now it's at $180, which is pretty cool. Again, I got lucky. And then what's some other ones? So some of the other ones that I have on here, like Ford, Coty, SiriusXM, and AMC, all these I got from free shares that other people who use my Robinhood link opened an account, and I got some shares from that. So if you want to open a Robinhood, link down in the description. And then the other ones on here that are pretty interesting to look at is Shell. Again, this is another one of those companies that I was just like, you know what? I need to buy this because it's a dividend paying company, and I need to buy this. And it's just like, man, it was just mistakes. Really, that Shell money should also be in SCHD as well. And finally, Rocket Mortgage. This was a IPO that I was excited about because I believe that Rocket Mortgage is going to be big in the future. And I was just like, you know what? I'm going to put like $18 into this. And so I put $40 into it, and it's done okay. I'm not going to say it's done amazing, but I think in the long run, Rocket Mortgage is going to be good. And I just wanted to see what it's going to look like. Every once in a while, I will just put some money behind a company just to see what is it gonna look like in the long run. And we'll talk more about that in my big bets portfolio. But anyway, that's all I got in this video. Literally, it's just me going through my portfolio. If you have any questions about this portfolio, and even more importantly, I just like the fact that I crossed the $2,000 portfolio. And if we look at, let's see what SPLG has looked like in the last year, just to see how the S&P 500 has done. S&P 500 has done 16% this year versus in my portfolio, I've done 26%. So I mean, I've been okay, but most of that is Microsoft. Like, if I'm gonna be honest, if you're looking at just the returns, most of it is Microsoft and Ally. Let's just be honest about that, because if we go back into it and we look at we look at SCHD and how that is done in the last year, which is the biggest part of my portfolio, that has only done 12% this year. So it's not like it's been this unbelievable return that I've had in my portfolio. I mean, for me, I've had 20% with my investment in SGHD. So, I mean, the bigger deal is the fact that I was just doing it consistently, which is very important when it comes to investing in ETFs. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire video. But remember, generosity is always greater than greed. I'm gonna catch y'all up on the next one, and I'm out. Peace. Whoosh.